One of the stocks that has received a lot of attention for a while, but especially this week, has been Tesla. After back-to-back days of almost gaining 20% on both of those individual days, Tesla then went down by almost 20%, and it's gone up a lot since this year. And it's definitely one of the top performing stocks in the entire market. So a lot of people are wondering at this point, do I buy? Do I sell? Because there are thoughts that Tesla just keeps on going. There are also thoughts that Tesla is overvalued and the balloon is bound to burst at a certain point. So in this video, I'm going to talk a little bit about that and how you can develop the investor mentality that will help you make the best decisions around this question and also for your portfolio as a whole. Hey guys, Marc Guberti here with another YouTube video. We cover investing, we cover self-publishing on this channel. So if you do like this video, definitely make sure you hit the subscribe button. But if my channel could grow like Tesla has been growing over these last few days, that would be pretty good because Tesla has gone on a tear so far in 2020. And just the fact that people who got it, like were able to buy it very recently at a little under $200 per share, and Tesla was pushing at $1,000 per share. It didn't quite get there, but it did get very close at certain points. Really shows the amount of support and the amount of people who are engaged with the stock, who have bought it. And obviously that leads to other people saying, do I enter at this time? And people who did enter, do I take my gains and sell the stock now? Well, Tesla isn't the first stock. It definitely won't be the last to have this type of gain. You see it in different assets all the time. Like Bitcoin was the craze in 2017. Now, I get it, Bitcoin, there's not as much there around intrinsic value. Tesla has a lot more things going for it. But one of the important things to remember during that whole craze is that Bitcoin shot up, and then there was a point where it just got cut in half, and it's going up and down. But pretty much when you have a big spike like what Tesla is currently experiencing right now, where it's keeps going up, it's looks like a parabolic growth, there is going to be a pullback. It's just natural because people look at an earnings report, they look at fundamentals, and they see, oh, this is overvalued. And then you have some people sell for that reason. You have some people who sell out of fear of like, I've made this much money with Tesla, it's gone up by this much. How much further can it really go up? Because it's not like a company can just keep putting up 20% gains every single day, and it's bound to stop eventually. Now, that doesn't mean Tesla comes crashing down to its price point before all the mania started, but what that price point is, we don't know. Tesla could go up as far as we know. Like, I'm not trying to act like I know where that's going to go because no one really knows where a stock's going to go. But the idea is that it's not the first time that mania has been around the stock, and usually there is a pullback. So I'm going to recommend at this point, it may be better to just wait and see if you don't have the shares yet. Now, for the rest of this video, I'm going to talk about how do you make the right investing decisions, because one of the things about Tesla, this craze, is that people are just wondering if they should buy or sell without thinking, what is my criteria? What is my decision making? One of the biggest mistakes people make when it comes to Tesla or when it comes to any stock in general is they don't look at numbers. They don't look at things that can help them figure out if this fits their criteria, but rather they will look at the charts and they see this stock has shot up dramatically recently. Let me jump into it now. Or having a gut feeling about something, because you want to have numbers and fundamentals and growth prospects really line up with the type of investments you want to make. So I'm more of a dividend investor. That's why you won't see Tesla in my portfolio. I do have some growth stocks, but they make up a very small amount of my portfolio. I am more focused on dividend stocks. That is my criteria. That is what I focus on for me. But you may be a growth investor. In that case, Tesla definitely fits the bill, and it is definitely something that If you find it at the right price point, then it may be good to enter in. Now, one of the things with Tesla and with any stock is shorting the stock. I mean, you've heard a lot about Tesla getting shorted by a lot of people, and those people, they're not feeling good about their decision right now. And in the long term, if Tesla goes down, then maybe these people feel better. But I would really recommend you stay away from shorting a stock, because if you put money into Tesla right now and let's say it goes down by a lot or something, you only risk the amount of money you put in. But in a shorting scenario, you have unlimited loss potential, because if Tesla does go up to $7,000, which isn't a number I'm making up, it is a number that has actually been said that, oh, Tesla could hit 7,000 in a few years per share, then if it does hit that point, that's going to hurt a ton of short sellers who pursue that activity. So I would definitely say not to short Tesla, just because even though the fundamentals, like there are definitely headwinds and things you want to look at, a lot of investing is emotion. And people love Tesla. There are a lot of people who love Tesla. There are a lot of people who will buy based on that emotion. There are a lot of people who see that uptick and they will buy more based on that uptick, similar to how Bitcoin came and hit almost $20,000 per coin back at its prime. But those are some of the things you want to think about, making sure that you are investing in the company because you believe in it, rather than because a chart is telling you that it's going up and the pattern says it's going to keep on going, but that doesn't guarantee that it will keep going up. And something that goes up that long is due for a pullback eventually. And another thing to consider when making your choice whether to buy or sell Tesla stock is to figure out what your stance is based on both the bull argument and the bear argument. The bear argument is pretty much Tesla has a lot of headwinds coming up. It's had unprofitable quarters again and again, and the numbers don't look too great. Like that's usually, you'll hear a lot of that in the bear argument. In the bull argument, you'll hear Tesla's electric cars are really going to shine. Tesla is more than just a car company. It is a tech company and should be valued like a tech company. Like there are different, like those are going to be some of the key things about the bull argument. The bull argument is more of growth potential. What can Tesla be in like 5 years? And what could Tesla be like even in the near term also, versus the bear argument, which is looking at the numbers and seeing some problems there. So you definitely want to look at both sides of the argument to figure out which one you fall on. Because again, I know like this is a little bit more of a general type of video. I don't have any Tesla on my portfolio. It's not something that I pursue because again, I do dividends, but you do want to understand how you will make your opinion looking at both sides of the argument. One of the things that too many people do is they'll look at some media narrative that says like Tesla shoots up or something like that. And then because of that headline, you jump in on the stock. That is not the way to invest, because that ignores fundamental stuff, that ignores growth prospects. Like if you buy Tesla because it's going up, that's not a good reason. If you buy Tesla because you can name all different segments of its business and growth potential and support your argument, then it's a good reason to buy. If you can't support an argument for why you would buy something or even why you want to sell something, then you cannot make that decision, because you don't know what you're doing. Then you're just gambling at that point. Like when you know the stock, when you know the company, and like not just knowing it as in like, oh, I know that Tesla, like they do electric cars, like knowing the company's growth prospects, knowing what countries they're looking at, like Tesla and China, like that's an important thing to be paying attention to, because that is a big growth opportunity for Tesla, that area. So you do want to know that kind of stuff to be able to support an argument. And if it's not something you could argue one way or the other, you should definitely sit on the sidelines and focus more on the things that you do know. And then the final thing for your decision is, what are your goals as an investor? And I know that every investor has the goal of making more money, but there are different ways to approach it. Tesla definitely fits the category of high risk, high reward. You could, people are saying $7,000 per share within a few years. And there are other people who will say, like, Tesla is bound to go down and the bubble is bound to burst. Like, you will hear those two different narratives. So it's a matter of, are you a high risk, high reward person who believes in Tesla? If so, you may want to buy it at, a more attractive price point. Or are you someone who doesn't believe in the company? At that case, I would say, if you have shares, sell. Like, you don't want to continue investing in a company that you do not believe in. There are a lot of people who, instead of selling all of their shares, it's better to sell some of the position gradually, because you could hit buyer's remorse where, let's say you sell now and then Tesla goes up another $1,000. Like with the level of growth Tesla is having, a lot of things can happen based on the type of mania that's around it. I don't think it will do that, but it is a possibility. So you want to be selling a little bit off of a position like Tesla at a time, if that is your decision. If you're someone who is saying, I like Tesla, I like its future, I like its growth prospects, but I just don't like the price of the stock right now. I think it's overvalued relative to its revenue. So then at that point, shave off some of the position, add back on if you want to when the stock goes down. And then when you shave off your position, if you choose to do that, or if you just don't have Tesla and you just choose to hold, think about how you're going to utilize your money to reach your investor goals. Are you going after an annual like 10% return, which is a really good return to be going after annually, especially like right now we're in a bull market and, like 10% looks pretty low if you compare it to like just how the S&P has been moving for like the past few years. But 10% return over a long period of time, highs and lows, to average that return is pretty good. So that may be a goal that you're after. Other investors may say, like, again, I know I've said this twice, I'm the dividend guy. Other investors may say, I'm okay with like a 5 to 8% annual return in appreciation, as long as I'm averaging a 3% yield and a dividend that grows at 20% each year or 10% each year, depending on what you want to set for yourself as an investing goal. And that also helps shape your criteria, because if you want the 10% annual growth, you are going to invest in companies that you believe have a lot of appreciation potential. While if you're more into dividends, you're going to invest in companies naturally that don't have as much growth potential. Like if you want a 3% dividend, you are definitely sacrificing growth potential. But at the same time, you are collecting the dividend. It could be a dividend that keeps on growing year after year, which is definitely something. If you invest in dividends, you definitely want to look for a dividend that keeps getting raised year after year, because that's usually a good sign that the company is doing well. And based on what your criteria are, a stock like Tesla could immediately be off your radar, or it can be on your radar. Now, with the criteria, sometimes you go a little out of bounds. So sometimes I'll invest in a company that doesn't have a high yield, but has that growth potential. And sometimes I'll invest in a company that has no dividend, but has that high growth potential. And in that case, if you are going out of the bounds of your criteria, you want those out of bounds decisions to be less than 10% of your portfolio, because once you set a criteria, you want to stick with it. One of the things about the criteria also is that it helps you sleep a little better at night, at least from a dividend investor standpoint, because the goal of dividend investing is to just build up the revenue. It's not to, stock goes up, stock goes down, and then, you buy at the wrong time, you could lose a lot of money and you don't have the dividends covering you during those times. So it's just based on where you are as an investor. And I would say focus more on figuring out who you are as an investor than this one decision of should I buy or sell Tesla. I mean, my preference, I would look for, instead of saying should I buy or sell Tesla, I would say, what do I believe is the next stock that could produce Tesla-like returns, just given how 2020 has gone so far. Like, I would rather look for that next opportunity, like a mid-cap stock than one of these stocks that has like a $100 billion valuation. Because the problem with a high valuation like that, sometimes it's overvalued territory, but that's just not, it's not always the case. Sometimes it is, sometimes it isn't. But the problem with the high valuation, like 100 billion, is you have to double the return on that stock. You have to go from 100 billion to 200 billion. While if you find something that's just around 5 billion, we're only talking about adding 5 billion to the market cap. Like, obviously that's a really big number to like, anyone, but in general, like 5 billion compared to like an Apple and Amazon and Microsoft, like 5 billion to them is just a little extra, while 5 billion extra dollars to a $5 billion company in market cap is that doubling the return. So that's one of the things you want to think about also. Do you want to continue to invest in a company that becomes a large cap and it's just harder to see those astronomical returns? Like Amazon, for instance, you look at that, you can still see some returns on Amazon and some really good returns at that. But if you look at, past years, like you go way back on its history, it's growing at that crazy rates because it's a good company, good fundamentals, but also in part because it was a smaller company, and it is easier for a smaller company to grow at an accelerated rate versus a company that already has so much value, so much like future potential priced into the current stock price, where it becomes harder to see those leaps and bounds. So those are all the different things to think about if you are deciding to buy or sell Tesla stock. And this is also a good video for buying or selling any stock. That decision-making process, what is going to be your guiding criteria that helps you make the decisions like that. So if you do enjoy this video, definitely make sure you hit the like button. I do a lot of videos on investing. We do more dividend on this channel than growth, but we do talk about investing and self-publishing. So make sure you subscribe if you enjoyed this video. And anyways, guys, signing off, dream big, achieve greatness, and unlock your potential today.